Check out shares of Lululemon. That stock sliding pretty sharply this morning. It's off by more than 12.5% after the company's fourth quarter results beat expectations, but it was the forecast for the current quarter that came in short of expectations, and that's why you see that drop off today. Joining us right now is Brian Nagel. He's senior equity research analyst at Oppenheimer and Company. And Brian, this is a pretty steep dive, but it's sparked by comments that the CEO made about how consumers are really pulling back.
Yeah, good morning, Becky. I mean, that's exactly right. I mean, as I was looking through this report from Lululemon last night, I think this is just one more indication, that, consumer spending here in the United States has slowed or is slowing. Here's a high quality brand doing a lot with their merchandising, like you said, coming off of what was a quite solid fourth quarter. We've seen this slower sales trend here in early 25. So I think this is very much another indication of a slower consumer spending backdrop.
Brian, a week ago, we had the CEO of Bank of America on with us, Brian Moynihan, and he said consumers are still spending. They've got like half of all Americans' accounts, and Americans are still spending even more money than they were a year ago. It's just going into different places, whether that be services, whether that be dining out. It's not that Americans aren't spending, they're just maybe not spending on some of those retailers. And it makes me wonder if this is as serious as a slowdown as some of these CEOs are saying, or if this is the new excuse to blame the weather. Instead of blaming the weather, you blame a slowing consumer.
No, look, it's a great question. I remember we were talking about that last week. There's the spending data. There's a lot of spending data out there, right? And B of A is probably looking at something much broader than I do. But what I would say, from my perspective, and again, like I said a moment ago, Lululemon's the last iteration of this. But I've had a number of my covered companies report their fiscal fourth quarter results over the past several weeks. Almost every one of them. Okay, this is Lululemon, Nike, Home Depot, Lowe's, etc. Almost every one of them has talked about a slower spending trend here early in 25. Now, weather was a factor. We had a lot of disruptive storms early in the year. I'm actually out in LA right now. We had the tragic fires out here. That was disruptive. But it seems like there's something more, especially with Lululemon. Given that they're one of the later reporters now, I think they have a better window into confidence. And I think from a discretionary perspective, consumer confidence is weakening, and that's reflected in this slower spending.
Is that a reason for you to take down your expectations or your ratings for your whole universe at this point? I mean, is there anybody who's outperforming that, or is this a big enough concern that you would say be wary before you start putting money in retail stocks because there's a potential recession coming?
Well, look, it's a great question. I mean, and that's exactly what me as an analyst and our clients are grappling with. Because look, if this is a short-term blip, if this is a reflection of the escalating global trade tensions, some of the uncertainty we have now in the U.S. employment backdrop, given the downsizing of the federal government, if this is more of a short term, then, as we look out a couple of months, maybe a couple of quarters, everything should be okay. But, then this is the big but. If this is portending a weaker environment or potential recession, look, you don't want to own consumer discretionary if we're heading into recession. Because these results were... Or
if we're heading into a situation where tariffs are going to hit their margins because, the Chinese president Xi is telling these companies, you better not think you're taking it out on our suppliers who are based here in China. And President Trump is saying, you better not think you're going to raise prices on consumers. That the only thing that's left are their margins.
Yeah, I mean, that brings up, and I've been listening to your show as we're getting prepared for this segment. I mean, that brings up a very interesting point. I mean, all I can say is good luck with this, okay? Because these companies are programmed to protect their margins. Now, I mean, they look, really well-run companies like Lululemon, like others, they have levers they can pull, okay? But I mean, they are programmed to protect their margins, and we've seen them do this in the past. So, I am
damn the torpedoes and forget what any of these presidents are telling them. They're going to protect their margins.
But Brian, I think this is the weather excuse when you have a bad quarter. It's like, Lululemon, we're going to sell a lot less. So I had my eye on some yoga pants, but these tariffs and this uncertainty with Doge, I don't think I'm going to...
I was in Lululemon 2 weeks ago, and I did buy some stuff, but...
Well, see, I wouldn't buy any new yoga pants, Brian, because I'm uncertainty. I mean, I have a lot of uncertainty about, Trump's...
pants.
I'm wearing... No, they're not yoga pants, but I'm wearing... That's not true. People aren't buying their yoga pants because they're worried about the future. Huh?
That's what I said.
know,
You
as
bought
silly
them.
as it may
No, I said
sound,
2 minutes ago. I said this is the new weather excuse.
Yeah, you did?
Yeah, I said just that.
I was arguing with someone.
consumer spending can be very, very fickle. So, Joe, I mean, maybe a situation where you were going in to buy 3 pairs of yoga pants, you only could buy 2. It's funny. As goofy as this sounds, it happens. But the consumers can be very fickle.